So if you look at the stock market as of late, there's no doubt that Santa Claus came early. So the real question is, how long will he stick around? We're going to explore that today. My name is Brian Cannon, and welcome to Markets in 5. All right, so let's dive right into the S&P 500. So as we wrap this year up, it's important to kind of look back and see what's happened. And you can see that recently, the S&P has just taken off right from the bottom, and it's just basically shot straight up. So we're getting really, really close to the recent high, or from the highs prior to the drop in 2022. So that's going to be important to watch. And we are at overbought RSI levels, and that doesn't necessarily mean that that's trouble. It just means that there might be a little bit of consolidation or pullback before another leg up, and so we're going to be watching that closely. But again, overbought doesn't mean, again, it's the market's poised to roll over, and I would rather have an overbought situation with a rising S&P 500 as opposed to an oversold situation where the S&P is making fresh lows like last time. Basically in 2022 it was oversold here, and it just kind of gyrated up and down, but just kept dropping. So again, when the S&P trades RSI below 50, it usually means the market's not doing very well. So we are above 50, and that's good. And the MACD really supports this move as well. So it is positive as well. Again, I think that the levels of MACD, the levels of RSI are both very, very high right now historically. So I think we will get a pullback. So we'll just be watching to determine, is this a buying opportunity, or is this something we need to be a little bit cautious of? Right now, we don't know, but I guess when Santa's handing out presents, you take them and you don't ask questions. When assessing the market over time and looking at trends and looking at your patterns, I think it's important sometimes to erase your lines and take a step back and look at it from a different perspective. And in doing that, there's a couple of different ways that we can look at this market right now. And if we look at it from the standpoint of a rising wedge essentially is a bearish pattern that resolves itself typically to the downside. And so right now, if this is a rising wedge pattern, we're at the upper edge of it, and it would make a lot of sense for it to pull back into this channel and consolidate some of those gains. And then again, if it is a rising wedge, usually it breaks itself to the downside. So that's why it's important to watch the levels on the RSI, make sure they stay above 50, and really watch the levels on the MACD and make sure that they are staying positive. That is one way that we can look at the pattern of the market. Conversely, this is another way to look at it. And again, this is why it's important just to kind of every now and again erase your line, step back, and take a look at it from a fresh perspective. So, I had a channel trend that we've been watching essentially all through 2022, that was different than this particular trend channel. And so again, we don't know if this is the trend channel yet or not. It takes a while for the trends to develop and essentially form. But if so, then we're also at the upper end of the channel for this up channel trend as well, meaning that we do anticipate a pull down. So again, will it happen this week, next week, the week after, 2 weeks into January? We don't know. But with an RSI that's overbought, with a MACD that's really, really high, we do anticipate a pullback. So again, if this becomes the new channel trend, then we could anticipate a pull down from the levels that we're at right now. All right, I kind of went through this last Markets in 5, but again, I just want to reiterate that again, when we look at technical analysis, we want to look at a lot of different parts and pieces, and I'm just showing you a handful each time. But again, I think the dollar is going to be really important as we get into the new year to determine, is it rising or is it falling? So if it continues to fall, that gives wind in the sail for the S&P 500 to continue moving forward. If not, then we need to step back and reassess. All right, the last indicator I'm going to walk through today is the VIX. It's the volatility index, and it's really just a fear measure, a measure of fear in the marketplace. And you can see that the S&P 500 and the VIX are inversely correlated, meaning that when one goes up, the other generally goes down. And if you look at the VIX over a period of time, we're trading, it's been at low levels. And what that means is that we're poised for it to kind of break out to the upside. And if you look at the RSI levels of the VIX, it did just break above 50. And if you look at the MACD down here, it did have a positive crossover and seems to be heading up. So again, we just want to watch the VIX level, because if the VIX continues to rise, then you could anticipate the S&P 500 to fall. And so again, it's very volatile day to day, and we'll just watch it. But what we're looking for is a steady trend, either higher highs and higher lows, or lower highs and lower lows. And so right now, with the S&P overbought and the VIX oversold, it's an interesting mix that we got to watch very, very closely, especially as we wrap up the end of this year and head into a new year. So in wrapping up, I think you can see that Santa Claus definitely came. I'm not so sure how long he's going to stick around into the new year. We're at overbought levels, and I do anticipate a pullback, and so we'll be monitoring those levels very closely to determine how much of a pullback, and is it something that could lead to something more, or is it something that's going to create a really nice buying opportunity in the short or midterm? So we'll continue to watch that, and if you have any questions, give me a shout. I look forward to seeing you on the next Markets in 5.